So today we had a big green day for the overall markets as we had the government job numbers come out, and guess what? We saw unemployment actually trickle upwards. And so this actually created some bullish activities for the overall markets for two simple reasons. Now, the first reason is that it's very unlikely now that the market is expecting for the Federal Reserve to continue hiking. In fact, this is in sync with what I've been saying on this channel for quite some time, that there's no need for the Feds to hike any further from here, as all the damage that they have done last year still hasn't really been felt through the pipeline and is now slowly bleeding into the economy. And so this idea that the market is now believing like, hey, the Feds no longer are going to hike, well, that's kind of bullish for equities. But at the same time, when you take a look at the 10-year treasury, we're also seeing the 10-year treasury yields start to fall downwards, as now the idea again with hiking is thought to believe to be done here. And of course, as I've shared on this channel before, when you see the 10-year treasury yields start to come downwards, well, that naturally starts to invoke a lot of upward movements for the overall markets. In fact, we did see Tesla stock initially rally up on the announcement of this job report. However, we started to see Tesla kind of find a ceiling in today's trading session, and that's actually something that I want to go ahead and talk about further in this video as we take a look at Tesla from a technical perspective. But before we actually take a look at Tesla from that time horizon, I actually want to show something pretty interesting for Tesla in the long term that came out today with Goldman Sachs. So we got this report from Goldman Sachs that battery prices are forecasted to fall 40% down by 2025. Now, this is great news for Tesla in the long term, and one of the many reasons why I am still very bullish on Tesla going on the long-term horizon, simply because going forward, it looks like the price parity to internal combustion engines are going to be much more closer. In fact, we probably are going to see EVs much more cheaper to produce than internal combustion engines. And then on top of that, we know that a lot of these legacy automakers, they're not working or really ramping up the manufacturing of EV vehicles. And so Tesla stock, or Tesla in fact, is still in a competitive lead over here with the manufacturing of EV vehicles. And so this is absolutely great news for Tesla stock in the long term. However, as I've been saying on this channel for quite some time, I do expect some challenges for Tesla, especially as we move forward into 2024. I said that, hey, once we start to see the pipeline of the economic pain start to bleed out, well, that's going to cause some problems for Tesla. And we're already starting to see that problem kind of leak outwards. And this is why, I'm saying, hey, look, right now, I'm just not interested in actually buying more into Tesla, as I believe that this rally that we've been having is short term, right? I believe that it's a short term relief, and as we move closer to 2024, that's where more pain is going to be brought in. And then of course afterwards, that's when we start to see things really truly bottom out with Tesla, in my opinion. But let's go ahead and actually hop into my laptop. This way we could kind of just talk about Tesla from a technical perspective, also cover some additional conversations that I believe we have to talk about. But before we go ahead and hop into my laptop, if you're brand new to the channel, make sure to hit that subscribe button. This way you don't miss out on any future video. Also, anyone that hits the subscribe button equals one additional treat for my cat Mochi, and she absolutely loves her treats. So with that said, make sure to hit that button and let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and I want to just provide a bit of clarity, as some of what I've said so far in this video may cause some confusion. And as I said, I want to provide a bit of clarity because on one end of the spectrum, I'm saying, hey, I am bullish for Tesla in the long term. Look at this report by Goldman Sachs. I believe this is good for Tesla in the long term. But then on the other end of the spectrum, I'm saying, hey, more pain is going to be felt, and that's bad for Tesla as well as the overall markets. And so I know that may cause a bit of confusion, and so I definitely want to clear that up. But before we do so, let's actually just take a look at Tesla from a day-to-day perspective. So we saw that at exactly 8:30 when that report came out, where we saw the labor markets were softening by the government numbers, we saw Tesla stock push upwards, as well as the overall S&P 500. And this is one of the reasons why I say that you want to pay attention to the economic data. I always get the comments of people saying, oh, how is this even related to Tesla stock, you don't know what you're talking about. But look, at the end of the day, economic data does have a huge influence on the markets. And so I know I touched on this in yesterday's video on how a softening in the labor market could be interpreted as bullish currently where we're at right now. And that may be confusing. And I know I explained it in yesterday's video, but I just briefly and quickly want to explain it quickly in this video. So the reason why the labor market softening is seen as bullish is because it goes with this narrative that the rhetoric that the Federal Reserve has been putting out there, that they are expected to see a soft landing where, yeah, maybe unemployment may increase a bit, but we don't expect a recession to come. That's that whole narrative of this soft landing. And so by seeing this idea that inflation's coming down and we are seeing the labor markets cool off, that kind of signals that the Fed doesn't need a hike. And so it kind of all boils down to this soft landing idea. But the issue is when you get past that soft landing, when things actually start getting worse, when you see unemployment actually start rising up higher than what the Federal Reserve actually wants, or you start seeing GDP actually contract at a much more extreme level than just a moderate softening in the economy, well, that's when you start kind of leaving the idea of a soft landing and start realizing that, oh no, a hard landing, a recession is coming. And so that's what we're currently seeing right now. Oh, okay, things are looking good. But if we start to see more weakness in the markets, that's when people start to raise an eyebrow and start believing like, hey, is this plane analogy of the soft landing actually true, or is the plane going to crash? And I used actually an analogy of an automobile on the highway. Yesterday I talked about how if you're going fast and you're in control and you need to go off on your exit, you could easily do that. But if the vehicle's velocity starts going faster and you have no control over the vehicle and you miss your exit, and that's when things start to get painful. And so that's what we're talking about. And I'll go ahead and highlight some points furthermore in this video, but I don't want to touch on that too much as we talked about that in yesterday's video. But what I really want to talk about is this area that we saw Tesla, kind of get rejected. So we saw Tesla push upwards. We saw the overall markets push upwards, but we saw the overall markets actually continue going upwards. However, Tesla did get rejected, and this is really just looking at Tesla from a technical perspective. And I want to show you guys, we saw the overall market green, but for Tesla, it looks like this upward movement was a bit stifled. And if you look at Tesla from a 4-hour time frame, it may have been a daily time frame actually, or let me zoom out a bit. We see that Tesla has been pushing up and is getting rejected right around over here, where in the past has been somewhat of a support. And as previous support can be future resistance. And so that's something that's pretty interesting to see with Tesla. We see this big wick. We're seeing that sellers stepped in and they rejected Tesla going above this. Now, does this mean that Tesla can't break above this trend line over here and go higher? Absolutely not. But as I've been saying, I believe that this rally over here, right? I didn't say that this rally wasn't going to come. In fact, if you could check my previous videos, I said I do expect the markets to push upwards as well as Tesla once we get this job data showing softening in the markets, once we see that the Federal Reserve was pausing. And so this is actually expected, this relief in the markets. But the idea is I don't believe that this is actually where Tesla starts continue going upwards, especially with the issues that we're seeing from their earnings. And again, it's hard to really pay these high multiples with Tesla when we're seeing issues with their earnings. And so that's something that I've talked about in the past. And yeah, I didn't think that it was going to go up this high. In fact, I believe that previously I mentioned that I didn't think Tesla was actually going to break above this 218 area. And in fact, it did. But now it's kind of showing signs that it may get rejected. And so that's an area that we absolutely want to pay attention to, because if we get into Monday's trading session and we see Tesla continue to get rejected from over here, well, that could be the sign that the relief is over. Or if we actually break above it, well, then we could possibly see Tesla push up quickly, very quickly, as we know there's very little volume relative to price right around over here, and see it continue moving up all the way until we have this high shelf of volume relative to price where we saw Tesla kind of consolidate in the past before. And so just a way to kind of look at the market for Tesla or kind of approach it. Again, technical analysis is not used to predict the markets, but just to measure where we're currently at. And so That's kind of what I'm seeing right now. Now, in the past, I've said that I do believe that when this rally is over, and again, I don't have the crystal ball. I can't tell you when it's over. It could maybe go a little further up, or it could be ended over here. But the idea is I don't expect this to continue going up, and I actually see Tesla. I could see Tesla falling down to this low 180 level, and so that's something that we're kind of watching. And one of the reasons why I'm being very patient with Tesla. It wasn't like when Tesla got rejected in its earnings over here, and I said, hey, on this 215 area, I expect Tesla to bounce. I was much more confident that Tesla was gonna continue moving upwards until we got rejected by this descending trend line. But as Tesla fell down to this area on this 215, I said I wasn't comfortable buying. We saw Tesla fall down. We're seeing this relief, and I still mentioned I'm still not comfortable buying. Again, you shouldn't follow any trade or investments that I'm doing. You should only do whatever you see value in. But what I'm trying to point out is that I'm just not confident in what we're seeing with the price action with Tesla, especially considering the fact that right now, yeah, it looks like the labor markets are softening, and that's good. It's softening at a moderate pace. But one of the things we have to understand is that the government job numbers, right? And I actually had a chart that I showed in a previous video, or it might have just been within the Push and Profit private group, actually, where I talked about how so far for the entirety of this year, for the labor markets, right, the government job numbers, non-farm payroll, and unemployment has been revised every single month for this year. And it's normal for revisions to happen, but these revisions have been very drastic, okay? And so that's why I've been putting much more emphasis on the ADP employment numbers, as those numbers are from the private sector. And again, this is not being a conspiracy theorist or someone with a tinfoil hat. It's just kind of pointing out that we're getting a lot of revisions from the labor market, and it's possible that we may end up getting this revision from this labor market softening to even harder softening, and actually seeing unemployment actually trickle upwards more than what we expect. And so that's something that I want us to be cautious about. And so I want to go ahead and actually highlight something. So of course I showed you guys this visual over here, just looking at how the overall markets were pretty green. But I want us to take a look at this chart. This is a chart I've shared in the past previously, and it shows how the number of people holding 2 full-time jobs is at a record level pace. We haven't seen this for decades, right? I mean, look at this. It goes back to 1995. That's about almost 30 years from where we're currently at, and this is not a good sign. As we know, people generally don't like working a job, and people don't dream of labor. And so when individuals are working 2 full-time jobs, that's not because they want to go ahead and go to work and come back home and then go to work again. No, that's a sign of distress in the economy. This is a sign that people are struggling and they're having to work 2 jobs. Well, what happens when we start seeing unemployment actually go up a bit harder than what the Federal Reserve is anticipating? Well, that means these individuals who have 2 jobs who are struggling are going to feel a big impact in their financial situation, and that's going to bleed into earnings, because at the end of the day, if you don't have your job or your second job and you can't get those paychecks, you can't afford to go ahead and spend. And if you can't afford to spend, well, of course, these corporations, these earnings are going to be pretty bad. And so that's something that I've been saying for quite a while. You know, we're seeing this relief over here, but as we move closer into 2024, the first half, the second half, we're expected to see this economy to stifle down, and my belief is that things are going to get a lot worse than what the Federal Reserve expects. In fact, when has it ever been a good idea to really go on the words of the Federal Reserve? I mean, these are the same individuals who acted too late back in 2021 saying that inflation was transitory, and then they had to eat their own words. And so again, you know, I'm not an anti-government type of individual, but what I'm trying to say is that you have to be a little bit more cautious on the words from some of these individuals who have an incentive to kind of spin a narrative. Of course, the Federal Reserve doesn't want to tell you, oh, you know, we actually don't know what we're doing, because that would take a lot of confidence away from them. And so, of course, they can't say that, right? It's just like the realtors who are trying to sell a shoebox of a house that's completely overpriced. They can't tell you, oh, I think this is a shoebox that's completely overpriced. They're going to tell you this is a great house to buy and I only see prices going upwards, right? Yet when you look at the National Association for Realtors, we see that the index is showing, and I don't have the chart up right now, but I've shared in previous videos that this is the time where unaffordability for the housing market is at an all-time peak. it's very unaffordable to afford a house. Yet you have a bunch of realtors just kind of putting that pressure. And so what I'm trying to say is that while you have the central bankers doing kumbaya, that everything's looking fine, no recession is coming, you have the the government saying that the spending problem that they have is actually not a problem. You have the realtors. Everyone has an incentive on what they're doing, and so that's why you just have to be a little bit cautious and have your eyebrows raised and actually parse through the data yourself. And so right now, we're going to be monitoring Tesla at this area over here and possibly see for a rejection. But if there is no rejection, then we're going to want to see what Tesla does as we get closer to this area right around over here, 250. But again, I don't expect all-time highs for Tesla. I don't justify the multiples that Tesla is currently trading at. And I know this is hard to say because I am a long-term bull for Tesla, and so it sounds kind of conflicting. How can you be bullish in the long term, but you don't see Tesla at these prices looking right? And that's fine. I'm just saying that, hey, long term, everything's looking good, but we still have some challenges ahead. But with that said, guys, of course, I just want to let you guys know I don't have a crystal ball, although, we have that joke oftentimes on the channel. There's nothing mythical over here, right? We're just looking at data, and right now this is what the data is showing us. But again, guys, you should not follow whatever I do, whatever else anyone else does on X.com or on YouTube or any fund manager. Always just trade and invest in whatever you see value in. And if you believe that this is a great opportunity to buy more Tesla, then by all means do so. I know when I talked about not buying Tesla at around this 194 level, I got some comments of individuals saying that you missed the boat and Tesla's gonna go all the way up. And that's fine if you believe that. Everyone's entitled to their own opinion, and that's what I actually encourage you guys to do, to only follow whatever you believe in. No need to spoon feed anyone or follow what anyone else does. Always do whatever you see value. But with that disclaimer out the way, hopefully you guys enjoyed this video, and before you guys go, make sure to check out this next video right over here. Take care, guys.